Hello everyone and welcome back here again. Today we're going to talk about some facts on the on-chain data, a lot of facts on the on-chain data, and so we'll be really fast, really fast. So let's go. For everybody that doesn't know me, I'm Joelle. I'm the CEO of ChainLog, and simply I have 29 years old. I'm exposed to the crypto market since 2017. This is not financial advice, and let's go. So, on-chain data. Realized price versus 200 weekly MA. As always, we are a little bit below the 200 weekly SMA, so we are actually testing the 200 weekly EMA at support. And if we are not going to take support right here, probably these are that we are going down. So if you want more information about that, I made an analysis. It was like 2 days ago, so Saturday, on YouTube here, and you can take that. It's on-chain macro news, technical analysis. There is everything, so you get my my view on the argument. Short-term model realized price is still holding us as well, more or less. Let's say that we are dipped a little bit below it, but still it's more or less the same as it was right here. We could say that it's still there, more or less. And if we fall back down from here, probably these are still that we are going to reach 23k and so on. Other support you find, it's here 18.8k from the on-chain data on long-term holder supply, the cost basis of long-term holders, or the cost basis of the entire market, that is in aggregate 19.8 right now. And saying all the market, I say let's supply that is active than less than 8 years, because obviously that supply that has more than 8 years is considered lost and hasn't price impact on the cost basis of the entire market, because obviously it doesn't make sense, because it isn't reliable as an indicator if anyone that isn't spending from the start, and so it isn't realizing any cost basis. It doesn't account for it. It doesn't make sense. So other facts right here we have. Let's get out this that is not important, and more or less let's have only the 6 month or less. These are the realized price, so the cost basis for 6 month or less hodlers, and in fact we are there, retesting it perfectly. And this is important as the short-term holder realized price, and we don't have to break down below it. 25.5k actually, so still above it on the line, and we have to break through the 2 years or less realized price of 29.3k. That is our resistance right now. So let's see if we can make it or break it. But if we get down below from 25k, as already said multiple times, probably we are going down. And these are the supports we have seen more or less on the old cumulative bands. We are not taking into account more than the probabilities that the black swan event will bring us to 18k, and in this case more than 6 month holders, so long-term holders are 18.875, and more than 1 year holders have more or less the same realized cost. So more than 18k will be invest all you've got, more or less, price though. And isolated age bands, here we don't have really realized price that is useful for us, because obviously there is the short term right here. The majority of the short term holders are actually more or less up and down, so we don't have that much of price. But the next support we have, as per them, is $22.720, and is more or less on the technical analysis. And I don't know if I can take it for you in a moment, here on super charts, what I did last time on technical data. Yeah, more or less it was 23.6. The another one could be there, so 22.5 more or less. So let's get in more and really fast. Still, these are all cost basis, and so they are supports and resistances. Address bands cost basis distribution tells us where the various categories of hodlers are on their cost basis, and it's like a volumetric inflow outflow, and it helps us to find supports and resistances as well. In fact, we see that 29k is actually the majority of the resistance we have is there, and the majority comes from handbacks and whales, and then a little bit of sharks and so on. So the same here, 27.5k and 27k are resistances right now that we need to break through, and then we have more or less zero volume on the other levels. So the next step could be maybe Onchain 39k, but I feel like will be 36k as per the technical analysis 0.382 Fibonacci level, and that we can actually see it right here, if I remember correctly. Yeah, 0.382 Fibonacci levels right here, and there is a lot of resistance and support right there building up as well. And address band realized price, so another cost basis, but this time not per time but per amount of Bitcoin held. In this case, we have the support of the AMBEX at 24.5k and 23.25 are sharks. Then we have a lot of support on the 22.5 area, and then 21 and 20.6 for the whales. In this case, so we should actually take into account 22.5k more or less, also on this zone right here, 22.5k more or less. Let's bring it down, and let me just 22.5 more or less, because there is a lot of support on the on-chain data. And let's just a minute. On-chain supports. Let's get down the text. Okay. So we have all of this support right here, these 4 lines, these huge supports in the case we break through and break down from the 200 on the daily EMA as well, other than the 200 EMA on the weekly chart that is right here. But anyway, let's go into the on-chain really fast. So we get now into the zone where we are going to talk about Bitcoin Days Destroyed. Bitcoin Days Destroyed comes out as a metric that help us understand if there are altcoins moving, and so altcoins that are actually more relevant to us because they're coming from long-term investors that found the value of this asset on this fundamental. So if there are a lot of coin moving that are old, that means that probably there is something that is going wrong with the fundamentals of the asset, or anyway there is this kind of flee from Bitcoin. So dormancy in this case is the supply adjustment metric that help us understand, taking out Bitcoin Days Destroyed right here, obviously, and that is the basic metric. So if you hold 1 Bitcoin for 1 day, it accumulates 1 day, and when you the day after you move this coin to another wallet, another exchange, this coin this day will be put on this metric and so destroyed. You can't obviously make 2 movements of the same Bitcoin, even if in this case you hold it for 1 day, you move 2 times this coin, it still counts as 1 day destroyed. So here we have 2 kind of supply adjusted metric for the Bitcoin Days Destroyed. These are adjusted for first the supply. In this case, let me the supply that we have right now to make so the actual the current supply it doesn't wait too much on the first supply, because at the very start we had low supply, low Bitcoin days accumulating, because obviously if you had 1 million Bitcoin every day, you got 1 million Bitcoin days accumulating, and now we have 19 million Bitcoin, so every day we get 19 million Bitcoins accumulating. And so we adjust this metric so that we compare these cycles even for the supply circulating a medium, and so weighting more the first part into the XM, and we see instead on the Bitcoin terminal adjusted, we weight more the current supply, because we think about the current situation. Okay, so the adoption, the market situation, and so on. So in a different way. In this case, we see that the supply adjusted for the recent is lower than the supply adjusted for the first supply we had. So as you see right here, anyway, more or less they come to the same pace. They go through movements to the upside when the market is actually getting really close to something like a top or a bottom, so when the long-term holders flee. And in this case we are still very more or less low on this metric, even if we are rising, because lately we had some movement from 4 to 8 years old coins, but still not that much to make spikes, to make us worry about the thing. And we see on the dormancy supply adjusted metric itself, so dormancy takes into account not only the Bitcoin days destroyed, but the volume of this Bitcoin days. So if you move these coins two times, you won't count the Bitcoin days destroyed, but you will count the supply 2 times. Okay, so in this case we're still seeing levels of high supply moving, but we have to account for that. It's not that old long-term holders are actually selling or so on, because we don't see that on chain analysis. In fact, if we take dormancy flow, that is an adjusted metric that takes into account the price and divide that by the dormancy, so the lifespan of the coins that stay dormant, so the lifespan from the time you acquire that Bitcoin and the time you spend it, we see that we are at the lower point possible. So compared to the price, the dormancy isn't actually for all the market in aggregate, isn't actually on all-time high. And anyway, moving to the upside is still moving to the downside, and we are still the lowest level possible. So if we have to account for the latest the other cycles, we are still in the bottom, the bear moving. Obviously you should account that even you see dormancy flow suggested right here in the second movement to the top side that something was wrong, and in fact it were more or less low against this movement. But if we take into account that and we try to make a trend line on thing like that, you see that we're slowly decreasing the amount of the Bitcoin days destroyed, because they're coming, obviously there we have more days destroyed, and still the price is not moving that much higher every time to make the difference palpable. This is obviously for the effect of the lower return on investment that we have every cycle, and the fact that we got less multiplier every time. And when we'll break through this metric, I probably see a huge hyper cycle that will come probably with the end of the long-term debt cycle that we are not going to talk about today. But if you want to know more of that, I would suggest that you read Ray Dalio's book, the latest one, talking about the how to account for a new world order. I don't know the English text of the book, the English title, but you'll get it. And obviously we should take into account why we have that much volume moving if we are not seeing that much movement on the Bitcoin days destroyed and dormancy flow levels. Well, it is taking into account the transaction count bands. We see that the majority of this movement comes from essentially people that has less than 0.1 Bitcoin, and for the ordinal phenomenon that is going on lately. There's a lot of movement, inscriptions and so on, to this kind of thing. So we are seeing that movement today. In fact, the average transaction volume is very low, even if there is a little bit of a spike lately. But this is a 7D EMA, and so it's not really taking into account the average value, because it will be unreadable. You see yourself. That is, we need this kind of metric to be more readable for us. Anyway, let's get into the percent of supply last active. So in this case, we are going to talk about the supply held. So if there is essentially, in fact, the possibility of long-term holder exiting, actually the hodlers, the supply that isn't moving in 1+ years is an all-time high, 68.34%. The supply not moving since 3 years is 40%. Okay, and we have percent of supply last active in 5+ years, 28.93%. You will say, how 68 plus 40 is 108%. Yes, you have to account the fact that this is taking into consideration 3 and 5 years and so on. For I know I'm taking I'm finding the things on the egg in English, but yeah, obviously for the people that may not actually understand that, it's easy. You see it yourself on the other waves. This is more clear. You see yourself that the majority of long-term holders and the base is still increased over time. In fact, you see that here we have a lot of supply, like 80%, that is in the long-term holder regime, actually. Meanwhile, the 20% is gradually moving down. We got spikes like 50% at the very start, and then we are actually 20% in the short-term holder ends instead. It's very simple. But what happened to lately the Coinbase and the Binance US? Well, obviously we are seeing this movement to the downside that we see on stable coins, we see on Bitcoins, and Ethereum reserves on exchanges is actually getting low before and still getting low even before the start of this thing, or with the second Coinbase and so on. We are an all-time low on the year for the stablecoin reserve. We are on all-time low for the year for the Bitcoin reserve, and so for Ethereum as well. And that's because people in bear market is buying a lot of those, withdrawing into wallets and long-term holding them. That's just what it is. Okay, so this is for today. This is it for today's on-chain data analysis, and if you want to know more, ask me. I'm here. You can get me. Subscribe if you like it, share it, click the notification bell, share it to your friends and whatever. Below you'll find all the social links to find me, where I am on Twitter, Instagram, TikTok, Telegram, and so on. And Telegram, you can even ask me directly. I will be very happy to find arguments and to talk with you. And nothing more, I guess. I pray, or I wish that this will help someone, and I wish you the best thing in life. As always, health, money, and love, and we'll see you next time. Cheers.